Chinese tech names are seeing a larger bid recently and are bouncing off some lows, so let's have a look at what's happened. Once again, I'm showing the Invesco Golden Dragon China ETF. The ticker symbol is PGJ. And notably, we have now this large green candle here, while the Nasdaq, which is this purple line here, has barely recovered yet. So I think there are a couple of things at play. So first, of course, in the US, we have this issue around the uncertainty of the monetary policy. The Fed might be tightening even further. We'll see about that and how the markets are reacting to it. And then on the China side, well, of course, you have these low valuations right now. But on the other hand, now we also have some weaker economic data coming in. And we've seen that China has started to, well, be more accommodative with also their monetary policy. So there might be an easing happening here, as well as further stimulus to help the economy. So basically the contrary to what's happening in the US right now. And also, while emerging market equities were a big disappointment last year, but 2022 may be different as China's credit impulse, so the credit growth as a percentage of GDP, is suggesting that there may be a triple button in place, which bodes well for relative earnings growth, which typically lags 6 months behind. And additionally, we had Charles Munger buying the dip in Alibaba and Bridgewater's Ray Dalio speaking positively about common prosperity. So this all helped to raise some awareness, and not only I was talking about this, but also, well, some other investors are starting to talk about a possible rotation of US tech into China tech, or at least buying the dip here. Now let's talk about the news that you don't get into your inbox, because this is rarely reported about. This week we had a pretty high-ranking Chinese politician publishing an essay around China and the digital economy. So here we have it, and let's translate this quickly. And basically in his essay, which I will link below, he's giving his views on the digital economy and China and also the tech crackdowns, and basically summarizing here that well, it cannot be the conclusion that financial and the digital economy should not be developed. In contrary, he says, finance is the core of modern economy and the development of the digital economy is the general trend. He's then giving his views on how the digitalization should be combined with the real economy, and also how technologies like AI, 5G and so on have a place in developing the economy even further. And I think the most important bit here was in the third part, the relation between digitalization and the government. And what he was saying here explicitly is the government should focus on formulating rules, maintaining fair competition, providing infrastructure and the basic public service, and reasonably guiding expectations. And then, this is very important, it does not need to intervene too much in specific technical routes, but rather depends on market competition and the process of industrial development. So basically, pretty much a statement towards free market economics, as well as not too much state interference, but of course emphasizing that the rules should be in place for the digital economy. And so I guess this was very well received by investors and those that take a deeper look at China. And then today we've got another news by the State Council actually publishing a notice about the 14th five-year plan for the digital economy and its development. And again, I will link it below because it's a thorough and a big document if you want to read it on your own. Just so much, China's aim will be to grow the GDP of the digital economy to gain a share of 10% of the entire economy, so from 7.8% that it's now. And they're talking about all of the upgrades and optimizations in the digital infrastructure that they are about to do in terms of 5G connectivity, internet infrastructure, as well as cloud computing. Once again, they talk about the digitalization and transformation of the normal industry. And they're going even so far as talking about expanding the international cooperation in the digital economy. So I guess the noticeable trend here is that we see increasingly the Chinese side coming out there and explaining their position, similar as what I've published before around the VIE structure and the delisting issue of the Chinese regulators going on TV. Here it's now Chinese politicians going out and giving more context to why there are these crackdowns on technology and why there are new regulations being imposed, but also their views of that this is actually not contrary, let's say, capitalism, finance, investment, and the economy. Quite to the contrary, it should actually, well, emphasizing the growth and the development of China for the future. And so I guess this is, well, if this will continue like that, then this will obviously also resonate well with investors, even during a time of a possibly weaker economy. So for now, if you're unsure which companies could be winning in such kind of an environment, or that there is still uncertainty with the regulations, you could always think about such kind of an ETF. Another one might also be KWEB, because this way investors can kind of tap their feet into the water without having to pick the winners, and are a bit more diversified. There's also no delisting issues with such ETFs, and so that might be a way of, if this trend is to continue to participate in well, this kind of a rebound of Chinese tech. Let's see if that is actually the case. Anyways, thank you guys for watching, and see you in the next one.